Good morning, ladies and gentlemen, and welcome to PELATRO PLC investor presentation for the interim results for the 6-month ended 30th of June 2021. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply click Q&A, scroll to the bottom, type your question, press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and will publish responses where appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once these are ready for your review. I'd also like to remind you this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Sebash Menon, CEO, and Nick Hellier, CFO of PELATRO PLC. Good morning.
Hi, thank you very much. Hi, good morning, everybody. Glad to be presenting to you today. So this is the half-yearly results, and thanks for attending the call. Let me get started. Many of you would probably know us, but just to give you an overview, I'm Sebash Menon, I'm the Managing Director and CEO, and I have about 30 years of experience in telecom software, having founded another company earlier and then PELATRO. I would now request Nick to introduce himself briefly.
Good morning, everyone. Likewise, I think most of the people will have met us before, but I'm Nick Hellier. I joined the company ahead of the IPO back in 2017. Originally, I qualified as an accountant with KPMG, then spent most of my career in banking, mainly with UBS and HSBC. Joined the PELATRO team in 2017.
Thank you, Nick. So here is the kind of snapshot of the highlights for the first half. Our revenue moved up from $2.29 million to $3.46 million. Now, in the past, we've had a situation where most of our revenue was in the second half. So there was a very high weightage in the weighting towards the second half of the year. Now that's changed now. Things are more even, revenue is more even, and that's primarily because of our shift from license revenue, one-off revenue to recurring revenue. So you will see various qualitative improvements in the company because of this switch from one-off to recurring revenue, and this is one of them. So recurring revenue, as you can see, moved up from $1.54 million to $2.43 million, and that constituted 70% of the total revenue for the half year. So we are increasingly becoming more and more recurring revenue and less one time. The recurring revenue itself increased by about 58%, as you can see there. And another interesting aspect that you see here is that most of the increase in revenue, the $1 million that of increase in revenue in the first half, flowed straight through to the EBITDA line. And that's because of the non-linearity in the business, and and consequent to which costs are going up very little for the revenue increase. So that resulted in about 47% adjusted EBITDA margin and a positive earnings per share. Moving to the next slide, we won a recurring revenue contract from an Asian telco, a potential revenue for about $1.5 million over 3 years. I think I may have stated in the past in one of our meetings that during normal times, I mean non-pandemic times, we were looking at winning 4 or 5 contracts and new customers every year. Now during COVID times, that's kind of down to 2 or 3. So out of that, one was in the early part of the year, January, and we are absolutely confident we'll win at least a couple more. You would have seen one announcement today, so that's our second new customer for the year, and we will have at least one more new customer during the year in the telco space. And another very interesting thing that happened is an existing customer group who were actually engaging with us on a one-off basis, license and stuff like that, have converted their contracts, and so there are five opcos in that particular group have converted all of that into recurring revenue. So that has also had an impact on the recurring revenue percentage. We won significant amount of change requests during the year, about $1.3 million of change requests, and they'll be executed during the year. And we have also been selling new modules to our existing customers. So on the whole, whether it is new customers or existing customers, there's been a lot of action in the past 6 months, and which is actually taking us to a much better situation financially, revenue-wise, profit-wise, etc., etc. Moving to the next slide, post-period highlights. We completed placing of about 8.38 million shares and raised about 3.35 million pounds. You all are aware of that. And with that, we have now repaid debt to the tune of about $750,000. Gross cash result of that is a gross cash of about $3.8 million at the end of 31st August. So we are quite we've got adequate funds in hand, so there is no working capital issue or anything like that. We are also generating cash. I mean, we've got positive cash flow now, which Nick will talk about shortly. So with all of that, I think we are in a pretty good position financially at this point in time. I'll just very briefly touch upon this. Most of you would probably know what we do. We are a customer engagement company. We serve telcos at this point in time. And what we do for them is to help them to understand their customers very well. I mean, very in-depth analysis. So we use data science, artificial intelligence, machine learning, and things like that. So we use all of those technologies to help our telco customers understand their customers very well, very in-depth analysis, as I said. And using that information, we help the telcos to engage very well with their customers so that churn reduces and revenue increases. So this is what we do. There's a twin objectives of churn reducing and revenue increasing. And that's what we do. So we are very deep in data science and analytics and AI, ML and such technologies, which we employ for this purpose. That brings me to the next slide. For the next few slides, I would, to handle the next few slides, I would hand you over to Nick, who's our Chief Financial Officer. I'll come back for the Q&A. Thank you.
Thanks, Subhash. I think we've touched on most of the big figures there already. Clearly, the revenue is showing a healthy increase, half one on half one. Likewise, the EBITDA. When we look at the detail of the P&L, you'll see that that is driven by the increase in revenue, with the costs being just slightly up. And of course, the recurring revenue is a very pleasing proportion of that and is set to continue. So that's very encouraging looking forward. Let's just dive into the detail of the P&L. Going down the usual list, revenue we've covered. Cost of sales, I caution people about reading too much into that cost of sales number. There's a lot of different things which go in there and which set against revenue, which also has a lot of different components, despite the fact, especially for the full year. Obviously, this half, it's mainly recurring and the balance is largely the repeating revenue, the change requests. But against that goes a whole bunch of things. Obviously, we've got people costs in there because we have people directly providing services. I mean, for example, the big Vodafone contract is the obvious one, where we have 35 or so people sitting in Mumbai providing those services day to day. They go in cost of sales. You've also got various, this is not a big number, but in there you've got various sort of third-party costs, like sometimes other software which sits alongside ours or things like that, which has license costs attaching to it. And then the other one is commission. Now, we do pay commission externally, this is not internally, externally to people who generate business for us. And I'll come back to that. So just hold that thought. I'll come back to that when we touch on the cash flow. In that cost of sales will be a commission figure for, in particular, the Vodafone deal and one or two other transactions in there. That's spread over the life of the transaction, so it doesn't hit the P&L all in one go, but it is in there. If we just quickly compare half one this year against half one last year, the difference of $200,000 odd is almost entirely the Vodafone people, because that came on stream in essence from half two last year. So we had a few people, I think, sitting on the ground in half one, but not nothing material. But clearly those people are now reflected in that cost of sales. So you can see that's in that cost of sales number. Looking forward, it may become a more meaningful number in terms of if people want to look at a gross margin. I'm not convinced myself, but because there are a range of things which go into it. But clearly, in a hypothetical world where we were doing nothing but managed services type contracts, then that would be a meaningful number. But all the time we sell licenses as well, that which clearly has a zero cost of sales, other than a very small amount of. Always be a little bit of a mix. So that's cost of sale. Overheads fairly easy deal. They've actually gone down slightly. We wouldn't read too much into that movement. It's not a big number in terms of movement, but it does, I think, reflect the The maturity of the core business, if you like, in terms of, since flotation, clearly those numbers have been going up as we've been adding capacity. I can't quite say that's stabilized, but we wouldn't expect to see such big growth in expenses looking forward. The rest of the numbers on there are fairly straightforward. No exceptional in this period. That exceptional in the full year last year, and obviously the half year, was related to the Danatec acquisition back in 2018. We had a contingent payment due there, and that was the exceptional, just an accounting adjustment to true up the amount we eventually paid out. That was all done by the end of last year, so there's no further liability on that and no exceptional this year. Amortization and so on and so forth. Finance expense is a big number. When we look at the balance sheet in a second, you will see that obviously that number is now out of date. As Sebash said, we've repaid around half of our debt, so that finance expense number will diminish looking forward. And the rest is fairly plain, and obviously an earnings per share positive this year. So if we look at the balance sheet, nothing particularly of note on the asset side. I'll come back to the trade receivables shortly because there is a specific question against that, which I'll address in detail. So I'll come back to that. Clearly on the liability side, these numbers are now, or cash side as well, these numbers are now very out of date because of the placing. We raised 3.3 million sterling gross, and with the dollar value of that, we repaid some of the debt, and the rest is sitting in cash as per the highlights of the statement. So nothing otherwise to report there. As I say, I'll come back to trade receivables because there's a specific question. If we look at cash flow positive in this half, would have been even more strongly positive. Just one point of detail, there was a large sales commission figure which went out in this half, which in balance sheet terms was provided at the end of last year. In P&L terms, gets spread over the life of the underlying contracts to which it relates, so actually over 5 years. But obviously in cash flow terms, went out in this half. So that was a hit to the cash flow, which I've called exceptional, quotes, not the accounting use of the word exceptional, call it unusual, I can't quite call it one-off because of course we will continue to pay sales commissions as and when people bring us business. But it was obviously a fairly large item in the cash flow, which was a negative to this year. We continue to invest in our intangible assets. That $1.3 million. That's the cost of our software developers. Again, if you looked back through time, that is if you look at the 2.8 million we spent in 2020, that number is, again, I won't use the word stable, but certainly the increase in that number has now, the rate of increase, if you like, has now diminished. We'd expect that to be a lesser percentage increase year on year. Finance costs and so on, I've mentioned, we'd expect those to go down as the group now has a large cash position and has repaid half of the debt. So that's the story for cash for the half. If we just turn briefly to the outlook and current trading, obviously this presentation predates this morning's announcement. You'll have all seen that. That's another contract win, which is, of course, encouraging. The revenue of 3.4, that's in round numbers almost half of the Cenkos forecast for the year, and we've already announced that we've got visibility of that 7.2, so that's again encouraging. We talked about recurring revenue. If we turn to the non-telco business activities, might get into more of this in the Q&A, but that's what we raised the money for back in July. That is, as people will know from that time, looking at the mobile ad business. Now we've started that. We've recruited one senior person in particular to run that team, and we're having a number of substantive conversations with potential customers to take that forward. Interestingly, one of the probably most advanced conversations is with a financial services sector business, which, again, if people turn back to the IPO presentation, we had a little bit of a look forward there where we put a slide in as to what the business might be doing in the next few years. And of those activities, one was data analysis for financial services. Clearly, banks and other businesses like that have a large number of customers. Similar in the sense to the telco sector, in there's a bunch of data there which can be analysed, and that's one where we are having, as I say, very significant conversations with a potential customer. As we said at the time of the placing, we don't expect revenue in that business this year. Some might come in. If it does, it'll be pretty small. We expect that to be revenue generating next year, 2022. Talking of 2022, given the contracts we already have in place, which are recurring in nature, we can already look forward to 2022 and look at the revenue we've got in hand, which is $6 million, which is roughly 2/3 of the Cenkos revenue forecast. Clearly, that's a very different position now to where we were only 2 years ago, when the look forward was much less certain. Yes, we had some recurring revenue, largely coming from maintenance, support, that sort of thing, but it wasn't a big number. Clearly, that's a big change to the business. So I'll pause there, and I think we open up to Q&A, or we could do the formal the written Q&A first, then see what's posted on the side.
Absolutely, Sebastian, thank you very much indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. Just while the team take a few moments to review those investor questions already submitted, I'd like to remind you that recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. As Nick said, Sebastian, you have received a number of pre-submitted live questions today. So if I may just hand back to you, and where appropriate to do so, read out the question and give your response, please.
Yeah.
Thank you very much.
Sebastian, shall I go? I think the first one is mine, or did you want to say something?
No, you can start. I was going to read out for you, so if you want to read out.
Okay, I'll read my own question. First question is on the trade receivables, as I mentioned. Could you explain how receivables are so high at approximately 6 months revenues, when most revenues now recurring SaaS income? Let me give a fairly lengthy explanation, but I'll try and make it clear, because as you expect, this question does come up a lot with most investors, and we address it in the same way. You have to bear in mind what our business is. Our business comprises a relatively small number of relatively high value transactions. So you can't, and I'm obviously simplifying hugely, you can't compare it to a manufacturing company who's selling lots and lots of stuff at relatively small numbers. You can't do that. I mean, I just looked at the trade receivables number, and the average debtor is around $150,000, $160,000 per piece. So, and that's per our 20 or so customers. So you need to bear that in mind. And given the mix of revenue, and I'll come back to the valid point about, it's the revenue for the first half is all SaaS type revenue. I'll come back to that. But given the usual mix of revenue, which includes licenses and things like that, doing a debtor-day calculation, which is the 6 months figure that the question mentioned, again, I would be very wary of. It doesn't particularly translate into that. Now, again, hypothetically, if we were to transfer, go forward in time to 2 years, and hypothetically say we were doing nothing but managed services type business, would the debtor-day figure be a meaningful figure? Yes, it would. More meaningful. Not quite sure it would be totally meaningful, but yes, it would. But at the moment, we're still in the position where just dividing the debtors by the revenue and multiplying by 365 doesn't quite work. But hold that thought. So if we look at our debtor list, it's 20 customers, and will any of them be owing us money at any one time? Yes, they will. That's a good thing usually, because it means they've done business with us. It's a very short list, and it's manageable. It's not like we're managing 100,000 customers and so on and so forth. And just because someone hasn't, quotes, paid us for X number of days, where X is, we've got 3 figures, doesn't mean that debt is either overdue or is in any way impaired. Let me just touch on 3 factors which lead to that. The first one is easy, but it's actually a pretty minor effect. First one is operational. Like any business, we have a very complex business, but sometimes we will deliver our software, and there might be a few things which need tidying up, which just need straightening out, and that might lead to a little bit of a lag in our ability to bill and our ability to collect. But it's tiny. It's 1 or 2 customers at most, and it's pretty small numbers. So that's just one there, but it is there. Of course it is, but it always gets sorted out. The second one is more a logistical one, where in the parts of the world where we do business, obviously, as you can see from if you look back at the 2020 accounts, the geographical spread, the bulk of Asia, number of countries there to get payments out of the companies and into the countries, there is a logistical process to go through, whether it's approval from internal.
Are you able to hear me?
I can hear you, Sebastian. Sorry, Sebastian.
Yeah, we can hear you, Sebastian. That's correct.
I think we lost Nick for a while, didn't we?
Oh, sorry.
No,
ever slightly, one millisecond. So that,
okay, that's okay.
I'll carry on. So logistical requirements to go through, whether it's it's sort of central bank or government or things like that. It is just logistics. It's not an issue. There's no particular risk there. It just means things are slower than they would be in a Western country, for example. But the payments do arrive. And the third one, which is the big one really, is the structural one, and this, yes, does apply to licenses and other one-off type income rather than the SaaS type income, I accept. But again, I'll come back to that. We might sell a license on January the 1st, but it might be several months before it's been through the implementation, the testing, the customer approval, so on and so forth. And it might be many months later before we can actually start even billing it. And then the billing is contractually usually in a few different stages. And then, of course, we have to collect it. Do people sometimes, take 10 days longer than they should do to pay us? Yes, of course, that does happen. But in the overall scheme of things, that's not a big factor. It's the other factors which make the calculation, and again, I caution about the actual use of that calculation, make it look like there's a big quotes debtor day number there. Does it worry us? No, it doesn't. Have we ever had a bad debt? No, we haven't. I'm not sure the detail is in the yes, the detail should be in the last report and accounts. If you look at the notes which deals with debtors and provisions, there's a technical IFRS 9 provision in there which is absolutely minimal. There is no actual bad debt provision in there at all. Now, clearly that was an audited number. We went through the mill with the auditors on that, so I think that should demonstrate that it doesn't concern us. So that's the debtor number. Just addressing the SaaS question. As I say, hypothetically, 2 years' time, if we were doing nothing but quotes SaaS, then yes, that should be a lower number. And indeed, if you split out and you can't do this in the published numbers, the recurring revenue debtors from the non-recurring, the recurring revenue debtors are a much lower number in debtor days. Again, don't like the debtor day calculation, let's just use it. Much lower number. The flip side of that is that the non-recurring revenue debtors are a much larger number in debtor days. Am I particularly worried by that? No, I'm not. There are a few big numbers in there which are largely structural under my the three factors I just gave. So that's the trade receivables answer. It's been the case for us ever since the IPO, which is now 4 years ago. As I say, we never had a bad debt. We're not expecting any now. We haven't provided for any, so we're pretty comfortable with that. Let me just quickly, because it's part of the same theme, answer. There was a question about
Number 5.
Question 5 about. Question is, can you please talk about uninvoiced revenue against Vodafone India and the percentage of total revenue against Vodafone India that still sits as receivables? I'm not going to give sort of lots of numbers, but the Vodafone revenue is around 20% of the total revenue for the half, which is where we'd expect it to be. The receivables, I mean, it's billed monthly, but again, given some of the factors in terms of getting things through systems and so on and so forth, especially where, given the nature of the contract, there is a little bit of sort of post-month end processing to be done. The actual debtors there are 2.5 months, something like that, which is nothing that surprises us. So I'm not quite sure where that question came from in terms of was it driving at a particular point, but is Vodafone itself a concern? Well, I've just said none of the debtors are a particular concern, so the short answer is no. So I'll stop there. That's probably enough on trade receivables, but that's our view on life.
I will. Thanks, Nick. I will start with question 2. The question is: you have good market penetration with developing market telcos. Is selling your software to developed market providers a very different proposition? Are there reasons why you haven't yet entered these markets? I wouldn't say it's a very different proposition from using an applicability of the product and things like that. But the developed market telcos really generally look for even longer reference period, some references in their own countries, and things like that. So you have to start small. So today's announcement about a contract in the Southern Europe, of course, I know it is Southern Europe. It is not exactly Western Europe, but still it's part of a very, very large Western European telco group. So these are the kind of contracts that we need to win going forward, and then slowly kind of graduate into the larger telcos in Western Europe. So the only reason is that we have not really focused on that till now. We were focusing on the developing markets because they are they are less bureaucratic and much faster. But now we will start looking at the developed markets as well. The next question, as a UK mobile subscriber with Virgin Media, I get advertising text for third-party advertisers, which are delivered by Virgin. Do you intend to try and reach customers in a similar manner with your new advertising venture? Exactly, that's a plan. I mean, our objective is to get to the brands, the different brands, and send campaigns and advertisements on behalf of them to the subscribers. So if it's Boots, for example, if you're serving Boots, or if you're serving Lloyds Bank, I mean, or any bank for that matter, I'm just giving examples in the UK, but in the geographies that we are now working, of course, there are different players. So for those brands, on behalf of those brands, we will send advertisements and campaigns to the subscribers. Yes, absolutely, yes. What are the big extra elements of functionality you want to add to your MViva software over the next year to stand ahead of or catch up with the competition in this space? I don't believe there's a catching up situation here. We are already quite ahead of the curve. So the kind of technology that we have today, we are way ahead of the rest of the competition. But then we have to maintain that. So in order to maintain the gap, in order to maintain our position, we will continue to invest in the software, in new features, functionalities, which are all largely around two things. One is customer journey management, which is very critical. We've already worked on that. We've already got a good offering. So we'll continue to improve that. And secondly, probably even more importantly, on data science and artificial intelligence. So making the product more intelligent, more capable, more intuitive, and things like that. So those are two areas: data science and artificial intelligence, and customer journey management. So the first one is from a technology standpoint. The second one is from a feature standpoint. The next question, question 6. Congratulations to Subhash for the Banix acquisition IPO. How will your time be now split between Pelatro and Banix? I will invest about 70% of my time in Pelatro and the rest in Banix. But from a timing perspective, I'm actually based in, I'm like fully based in India these days because of absolutely no travel. I've not traveled anywhere for the past year and 8 months or so. And I don't see any meaningful travel coming back into my life for the next 8 to 10 months. So what I'm doing at this point in time is, Pelatro is my day job. So from morning till about 8 o'clock in the evening or something, I'm on Pelatro. And at that point in time, everybody's winding down in the regions that I work with, Asia, Africa, Europe, and all that. By the time it's 8 o'clock in India in the evening, Europe is winding down, Asia is already in bed, Africa has already wound down, and then the time I invest in Banix is in the night, which is when US opens up. So because of the geographical positioning, Banix is all US centered at this point in time. The timing wise, it's perfectly fine. So one is not eating into the other one, but amount of time wise, 70-30, I could say, or maybe 75-25, 75 in favor of Pelatro. Question number 7, is there any chance that the acquisitions made under Banix will create synergies with Pelatro as well and thus create value for Pelatro shareholders? There is every chance that could happen, but it all depends on exactly what we end up doing in Banix. But my hope and belief is that yes, it could very well happen. So that's expectation. So on the whole, I mean, Banix should complete its acquisition in the next 12 to 15 months. So at that point in time, you will see, I'm hoping, and that's what I'm kind of hoping will happen, and probably working towards as well, that whatever we do in Banix is complementary to what's happening in Pelatro, and both sides will benefit from each other. So that's the expectation and the hope. Coming to the question, I mean, those were the questions which came earlier. Now there are questions that have been posted online. So the first question I will read out is, you have been raising money every few quarters since going public. When will the company become self-sufficient and do not have to dilute equities? Nick, would you like to handle that?
Yes, just coming back on online. Absent a corporate event like an acquisition, I don't see us needing to raise any further money for the ongoing operations. We raised. We were very encouraged by the raise we did in July, and as people will know, and many people online today might well have come through the primary bid mechanism. We were delighted by that, but that has given us a strong cash position. Now that is, as we said, to invest largely in the non-telco business. But as you can see from the cash flow, we're now sort of operating cash positive, so we don't see any need. Now, we talked about acquisitions before. You know, we are opportunistically acquisitive. If the right acquisition comes up, then of course we would look at it, and that would almost certainly require a fundraise. But certainly, in operational terms, the answer is no.
The next question: a few quarters back, you won a service management contract in India. Apparently, that telco is facing survival issues. What is the current status of the contract, and what will be the worst case scenario in case the telcos struggle to pay the money? Now, this is Vodafone India, which is being referred to here. Yes, they are having financial difficulties, but the interesting thing to note here is that their financial difficulties are not from an operational standpoint. They are still making almost 30-odd% EBITDA. So for their day-to-day operations, for their general business and stuff like that, they've got absolutely no problem with cash. Their problem is with regard to a lot of payments that are owed to the government, which actually pertain to the last 15 years or so. So it's accumulated stuff. So that's where they have a problem. They don't have any problem in day-to-day activities. So, and the government is now helping them to address that. I think they are about to be given a moratorium of 3 years or so to begin with for that. They're also converting some of that debt into equity. So there are steps afoot like that. And once those things come into play, Vodafone will be in a much better position. But the bottom line is that absolutely no issues on their day-to-day activities. And as we speak, they have paid us every invoice as they have fallen due. So there is no. I mean, there'll always be a couple of months outstanding from them because of the cycle, because we invoice them after the month is over, and then it takes about 20 to 25 days to get the invoice into the system because it has to go through an approval process. Once it goes through the approval process of about 25 days or so, it gets into the payment system, and then it's about 45 days. So on the whole, it takes about 75 days to get paid, about 2.5 months. That's only the process. That's not because they don't have money. And as we speak, they've paid us till the end of June. July is getting paid this month. All of it, and half of July has got paid. I mean, I don't want to get into the details of it. Each month's invoice is actually split into two because of the business side and IT side and all that, because of their budgeting reasons. So they pay, so two payments come every month to us. It's not one payment. So one of the payments has actually come already. For the July payment has come in October, and the other payment is coming now. So our lag is only 2.5 months, and they are absolutely current with regard to payment. So we have absolutely no concern there. The next question. Okay, I don't know why some of these questions things are moving on its own anyway. When I answer, I think the questions go. Sorry. Are any of your revenues contingent on customer performance that's related to customer ARPU lift? Yes, some of the payments are, but when we talk about an ARR, for example, our recurring revenue run rate, and when we talk about, Nick in the presentation, Nick, in the last point there, as you can see there, is that for 2022, we have a visibility of 67% at this point in time. 2/3 of the revenue expected for 22 is already in the bag. So when we give these sort of numbers, the ARR and this number which I shared, we don't count the recurring revenue. So for example, we just heard that 20% of the revenue for first half came from Vodafone. That from Vodafone as well, there is a recurring there is a revenue share concept, but we have not included that in that. That's on top of this, which is just getting concluded for the first half, and we actually, incidentally, we just raised the invoice today for that period. So because that takes time. So revenue share is there, but in our projections with regard to the 67% of next year revenue and ARR and all that, revenue share is not included. So you can consider revenue share as an icing on the cake. It's on top of that. You postulated that advertising could be 15 million in 24. Is that total revenue or PELATRO's? If total, how much would be attributable? That's total revenue attributable to PELATRO will be half of that. That'll be like $7.5 million at that point in time. Next question: do you have accrued revenue within your debtors? If so, what proportion? Nick, would you like to take that one?
Yeah, sure. By this, I take it you mean unbilled revenue. Yes, we do, and it's quite often, in fact, most of the time, the majority of the debtors are unbilled, and that's for fairly simple reasons. Given our contracts, even a fairly straightforward managed services contract, we'll have performed the services as of 30th of June. But I think Subhash was just talking about the detail of how we then build that. It might actually not get billed until it's gone through various admin and other processes. So as of 30th of June on the reporting date, or 31st of December, it won't be billed. And that's not a surprise. And have we ever had any unbilled revenue which is turned not to be billable? No, we haven't. So again, that's not something which concerns us. It goes back to my comment about the receivables generally, as in it's a structural factor of how the business actually works. Again, contrast by someone selling stuff out of a factory. Yes, they might have delivered something on the 31st of December, which they haven't invoiced until the 4th of January, but that will be a couple of days worth of their sales, whereas with us, it will be a much larger number simply because of the way the business works. So yes is the answer. Is it a concern? No, it's not.
The next question, thanks Nick. The next question: Vodafone India is in very serious financial issues with millions of dollars in outstanding payables to Government of India. Do you see that risk, and how do you plan to mitigate the risk? Honestly, we don't see a risk at all. This has been the case ever since we bid for the contract. So from 2000, I think we won the contract towards the end of 2019. We started bidding for it in 2018. So from 2018, the situation has not been different. They've been on a different difficult situation. But then, as I explained, that's not from an operational standpoint. That's only with regard to the government dues. So am I concerned? No, particularly given the fact that, as I explained earlier, the Government of India is now about to give them a moratorium for a few years and things like that. I don't see a risk at all. So there's nothing to mitigate there. I mean, we don't see a risk, period. When do you forecast returning to net profit, Nick?
Sure. Well, I'm slightly, I'm just reminding myself of the P&L. We are, for the half, we are in net profit already for this half. And even if you, that's including the amortization of the acquisition-related intangibles, which are $350,000. So if you add that back to get a sort of quotes normalized profit number, then we are profitable. So that's where we are, and we'd expect that situation, broadly speaking, to continue.
Thank you. The next two questions I'll take together. Any chance Banix's acquisitions will be merged with PELATRO, or rather, will PELATRO be subsumed into Banix acquisition? Now, that's a very hypothetical question at this point in time, which I certainly cannot answer. See, first and foremost, I'm on both sides. I'm in PELATRO. I'm also in Banix. So I'm a conflicted party in that sense. So I can't even be commenting on this. When Banix completes its acquisition, or once it identifies its target for acquisition, at that point in time, I'm sure the independent directors on the boards of both Banix and PELATRO will look at the scenario, will evaluate all possibilities, and will take the right decision for both companies. Even at that point in time, because I'm conflicted, naturally, I won't be voting on that. I won't be commenting on that. So I'm not going to comment on that today. It's completely left to the independent directors on the boards of PELATRO and Banix, and I'm sure they'll do what is best for the investors. Would you expect revenue share to increase in 22 from the $500,000 estimated this year? See, our focus is not so much on revenue share contracts. It's actually on recurring revenue contracts. We like fixed revenue contracts. So because that's very predictable, we know what's happening. Revenue share, you never know until the month is over as to whether you have got a revenue or not. So that's not our focus. So given the fact that that's not our focus, it may or may not increase. So it's difficult for me to comment. I mean, we need to wait and see as to, and again, it's revenue share. So it all depends upon whether we manage to increase the revenue or not. So a bit difficult to answer that. And all I would like to say is that that's not the focus area.
Sebastian,
Nick, questions at this point in time?
Thank you very much. You've answered every single question that's come through. And of course, any further questions that do come through, you'll have the ability to review those. Sebash, perhaps I could just ask you for a closing snapshot before I redirect the investors to give you some feedback, please.
So basically what, you're expecting some comments, right? That's what you mean by closing snapshot.
Yes, please. Just a closing
Yeah.
wrap up.
Okay. Thank you. Just making sure. So basically, what investors need to understand about PELATRO at this point in time is that the business has completely moved from one-time to recurring revenue, resulting in the quality of the company improving significantly, enabling us to have very high predictability and visibility for the future. And it is to be noted that while we are only in October 21, we are having, at this point in time, we have about 67%, 2/3 of our expected revenue for 22 in the bag. Now that's very that's a very good situation, very comfortable situation for us, and I'm sure that by the time we start the year 22 in January, we will have an even higher number, higher than 67%. So that shows the quality of of the business, the depth of the business. So absolutely, I mean, what the investors have to understand is that the company has delivered on the plan that it had of converting from one time, which is unpredictable kind of revenue, to recurring revenue, which is very predictable, and we'll keep building on this base as the years go by. And this base will give us the ability to increase revenue organically at around about 20% every year going forward. From last year to this year, it's a higher number because of this correction which happened in our business of converting to recurring revenue. But going forward, it'll be something like that. I'm seeing another question here. Will any revenue from contract won today feature in the current FY? Probably not. I don't know. It all depends upon when some of those when it will be executed, IFRS, and so many points. So I don't know at this point in time. But for now, I would like you all to focus on the number $7.2 million that we have given for this year, for which we have full visibility as the number for this year.
That's fantastic. Thank you again, Sebastian, Nick, for updating investors today. Could I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of PELATRO PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good morning.
Thank you very much. Thanks, everybody. Thanks to